Welcome to TradeTheMBI.com. This is Jonas Reporters for the 29th. The excitement continues as the summer rally. The sell-in may go away. Ooh, geez, that would have not been such a great thing. I'd have to shrink my chart here for us to go back to that. But there we go. Start of May, started selling, and that's what they did. And by the time we got to the beginning of June and they were all out, we were down at 27, and here we are at 3,000. So that's 300 points. Yeah, not a good plan so far. Oh well. The reality is, whatever weakness we have seen, we've seen it where the DOC red was above zero. It's come back below reset. Nice little dip from the shakeout. No dip below the red line here, though, so it wasn't like we got to a super oversold. There was plenty of new money coming into the setup. And I think a lot of it can be attributed to companies using their money to buy back shares, and that's kept prices elevated, and it's going to continue to, because that is the driving force, that is the underpinning of the market. Not to mention, when the Fed talks about moving to zero rates, you really don't think the market is going to, of course they're not talking about zero rates, I'll be precise, in this case they're talking about at least not raising rates and potential of them even lowering them. That would have huge implications for assets, because it means that 3,000 is cheap. Yeah, cheap. Go figure. Because when the value of money costs nothing, then you're going to see asset prices inflate dramatically because the anticipated inflation that comes with it. Though that's not been a factor. And of course, some people are trying to rewrite the paradigm of how that works. But as long as you keep flooding the country with new labor and that, you're going to keep wages down, which will suppress pressures for inflation to go higher. So that's still the reality. Nothing's changed, despite the rhetoric about clamping down on illegal immigration. I think it's still even greater than it had been. So anyway, NASDAQ also doing the exact same thing, and again, it's a little bit better off than we saw from the ES if you look at the DOC, because the DOC really kind of depicts it. Here you get the steel falling off from the DOC for the S&P. Yes, we were in a nice incline. With the shakeout, though, it was getting a little less impressive as of Friday. We'll see if it's able to maintain the histo or start a lower one, because at this point, then you're looking again, this would be the third lower histogram on higher price, and that's where I want to start looking for DOC spread, because that will most likely produce the most significant downturn. Not that I'm predicating that, because as long as you're following the 50K, and if we're following that, might as well just jump right to it. It had rebought after selling, because we had stabilization after the sell. There's nothing wrong with that. Would have done it sooner, but it tries to give it an opportunity. Even if you have a sell signal, it doesn't go out unless you violate the actual stop, which is smart. And in this particular case, though, reignited after it did get the final sell signal dip. And we can look at the performance report, because this thing has been absolutely stellar throughout the year, at least this year in particular. So there we are. If we look at performance graph, continuing its escalation, and the return on the year so far, just from January of this year, pretty amazing. 2018 we knew was tough, and even with this number, there were still several trades that were, in my mind, ones that we looked at that said, nah, they're probably going to dip a little bit more before it makes the move. And so, I mean, we would have done even better than that. It's just been a little bit of a challenge trying to wrestle with some of the technicals that go into achieving the proper buy as it relates. I've got it on certain ones like these where we convert to the right color and boom, it goes and follows it. A couple of them are just a fraction off from my adjustment of the paint too, but it's getting closer. Getting closer all the time, which is very exciting stuff, because within that I've already incorporated the beginnings of some of the short trades that will go with it, which will give it a whole added dimension. Because if you just pick the strongest ones, which we usually do very well with, and we're not in a long position already, then I think that it's going to produce some excellent results. So NQ, like I said, still doing slightly better, but we had the dip of the steel a little bit earlier, and if you don't get much of a fall off from that, you've got to see a pretty big separation, or at least that matter green falling underneath to see to have it begin to create a dip of any kind. And even with the euro continuing its collapse here, nothing dramatic, as the U.S. is still going to underpin this because they really don't want to see that breakdown anymore. Of course, now with Boris Johnson at the helm, the expectations for Brexit skyrocket, though there are rumblings. I think you're going to probably see some pop backs as there's a suggestion that maybe he won't be able to do the no exit, blah, 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 blah. It's just going to be a bunch of baloney. As we've known, though, the euro, we're expected it to break below into that below 110 range anyway. And gold, it's going to maintain this. Central banks, your China, your Russias, and that India, they've been buying up gold for a while now, which has created this pump because their expectation is to, again, there's a broader play trying to get past U.S. dollar reserve currency status, and they figure that if they buy up gold, they'll have enough reserves that they would be able to justify some form of a, indirectly connected crypto, which is ultimately the plan, is to move to all cryptocurrencies for all governments. India was the experiment with that, but it's a little early to talk about that because the ES5K chart started from the Thursday, moved into the Friday, and just continued. Boom. We had a couple of decent signals that popped in right around the zero in that. The issue with them is that they all created steel resets that immediately rebounded. So even though they were static from that point of the sell signal, it was still time to flip and turn around as they went back to their bullish configurations with that steel dip below. Then it stayed pretty much cyan into red the whole way through, with steel coming from below. And even when this DOC spread came, what was nice about this one is that you had the steel already below the negative 13.5. So from that standpoint, I like it a whole lot better at the 27 level, which was really a good one to take advantage of at that particular point. And then sure enough, the crossover came right here. That was the beginning of a basing, and then it crossed de facto on a cyan dip below zero right here. That's led to this most recent push-up. So we'll see if that's got more legs to it. It's already getting close to being overbought, but it's likely to just return back up to where we were prior to Friday's close. So all in all, decent stuff. I think we're going to get, again, decent gyrations. This was still an excellent move. It's just 20 plus points. It's just a matter of following along. And from a 50K standpoint, that's all it's been doing since about the 3,000. And again, what's interesting about this, and it becomes critical now, is we've reached the 23-ish range that has typically 22, 23 range that I look for when you break a even number. And what you're looking for is closes that stay above that range as a marker that you've broken through, and that's become the new floor. So that's what I would be on the lookout for at this particular point. I don't have any positive extremes that are relevant to any of that. We're close. Just this last one from a 50K standpoint, and that will give us a reference. So I'll be sending out indicator renewals and that, so you'll be able to get an early start to be ready, because it's going to happen during the middle of the week for the changeover, and you want to be all set for that. Trade well. We'll talk again later.